Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for a hurricane of a trading day. Besides the hurricane that's hitting Florida, it was crazy here in the financial markets as well. And this is for Wednesday evening, and we are now at the 28th of September, 2022. So we walked in this morning, and I'll discuss more of this in the financial news update. When we get to the financial markets. But let me just tell you, the Bank of England stepped in, intervened in the gilt market, not the currency market. When they did that, it set off a tidal wave around the world. And basically what they did is they want to correct a market that became dysfunctional due to some programs that were put in by Parliament, and that the market is wondering how those programs are going to be paid for. Giving you the snapshot. I'll discuss more, as I said, in the financial market wrap-up tonight. So when that occurred, and when it occurred, we were at 4% in the 10-year note in the United States. We haven't hit that number since 2008. Just a week and a half ago or so, we were 3.5. So we've come all the way up. Literally, right away, the market starts selling off in those. The dollar starts selling off because dollar in part is based on higher interest rates, the safe haven. You're getting more money for your money. Got it? That reverses course. We start seeing rates fall. The stock market looks at it. Oh, this is good news. It takes off to the upside, and the commodity markets are watching the dollar, and they go bonkers in different ways, from the gold, the silver market on. I've given you the gist of what it was. Just keep in the back of your mind this. This market had been pulled like you pull on a rubber band and you let go of it. Day after day after day, the bonds and the notes had been under or riding the lower Bollinger Band lower, a combination of the two. So it was just straight downward, almost 14 days. So markets need to correct. And when they correct, it comes out of nowhere. You never know what it's going to be, but it shows up. That's what happened. Now, the big question is, was that event enough to put a trading bottom in the market or not? Let's do something. I want you at this point to go to my website after this. Go to iraepstein.com, and if you have not looked at my special report on stock indices, please go look at it. It goes off the board today. It comes off our website at midnight. So it's 6:15, 6:20 Chicago time. Just over 5.5 hours, it'll be gone. So I don't care what your time zone is, this is how it works. My reports are 3 days old, that they're not for history, they're not to go back. Oh, how did Ira do? I stick my neck out because the report's timely for now. I didn't write it for 6 months for now. And in that report, I point out what the Bollinger Bands are doing, what the seasonals are doing, and what I'm expecting in the terms, first, the bounce. Aha, we got the bounce, and the step after. You take it from there. Next, you might want to look at the free offers to go along with it. This is a perfect time if you want to see the morning subscriber videos so that you see day to day what's going on. Join in, because this has become fun. Remember what I told you. You're still in September. I told you we were going to get the A-League traders back in the market. Things would change. You're there. It creeps up on people, but that's exactly what happens. All right. So let's go back and see just what this all means for the gold market, because that's what we're talking about. For gold, for the week, we're up basically 0.67%, not even a percentage point. But you're getting a small bounce. You were lower coming into today for the week. You had a monster move. You made the lowest low of this whole break today, and you closed sharply higher. When you make a low that is lower than the prior day and a high that takes that out and you close higher, it's a key reversal. Got it? There are outside days, and there's also key reversals. You closed at the top part of the range. In order to negate all this, you have to go back through those lows. But you probably made a trade bottom of sorts now. You also did something else. If we step back together and we look at this, you had a pattern of lower, as you can see, we're coming down. And the question is, were you going to stay down? Well, with today's action, now I'll take you to it. This is yesterday. You come down, you make a lower low, which means you'd have had lower highs, lower lows, and that gets reversed with today. When it gets reversed, what that means is you're no longer in a trend. You've stepped out of this whole break mode. It doesn't mean you're in an uptrend. You've ended that swing to the downside. That momentum swing ended. Next, we go to the where could it go? Well, if the market's going to have any legs to it, why not go to the 18-day average of closes? Is the market a buy? No, in my opinion. Why? Because when you're under the 18-day average, you have a downside bias. You're looking for sell signals, not buy signals. So I'm still there. Are the bottom pickers going to come out? Of course they are. Okay, but they were coming out here. They were coming out here. You know, that's what happens to bottom pickers. Okay, they're contra-trend people. You ended a trend, you haven't begun a new one. That is the best way to look at it. The market had been riding the lower Bollinger Band, so I cannot say that the Bollinger Band caused the bounce. I can say with certainty that the market did not stay under the Bollinger Bands for any length of time. They get under them and they get thrown to the right-hand side continually. That part worked. I can say another thing that it went on. Let's go over here and start looking at the slow stochastic reading. So when we come here, we're looking for days that come together where these numbers are under 20 together. And once you can get a string of them, here's the first day they weren't. So you get 1, 2, 3. So on September 22nd, you had a situation where you embedded, that's called locked in the slow stochastic, where both numbers are staying under 20 for several days or more. As long as they stay like that, in my opinion, and what I teach, is the pros will sell the rallies looking to get back to the Bollinger Band time and time again. If you don't get the rally, they won't make the trade. Now what happens today? This is the 28th. On the close, the market settles at 23.42. Any settlement over 21, the way I teach in my enhanced Bollinger Band course on our website under education, that is a get out of all shorts. So I have two pieces there that are saying come out of the market. Now, you can re-embed only the next day before you got to go through the whole process again. If tomorrow were a big down day and the market, let me get over there, here we go, and the market were to get both numbers back under 20. Barring that, the odds favor that unless you come back and take out 1620, 220 before that's hit, the market's going to try to get up to the 18-day average of closes. I'm going to repeat. Still don't see a trend trade, but I see the probability of that taking place. When I look at the gold-silver ratio, just the other day we were saying, I told you in intra-evening you had been there, you were attacking the 18-day average closes, and I said that might be where the silver that had been losing to the gold wants to make a stand and say it's not that bad, and that seems to be what's going on. You have a higher high, lower low, you just missed hitting the lower band, you'd been oversold, and you've corrected that. Are you trending? No. You're sort of just spinning your wheels caught in the black dashed lines, which are the Bollinger Bands. Again, the Bollinger Band is an algorithm. The purpose is to keep the market trading within it 95% of the time. You can step out, you can step under, but you will stay there. The pros use it as profit-taking tools, the way that I teach it at least, that when you hit the band, there's ways to come out of part or all of your position. I teach that in the course as well. Next, you go to the copper market. Well, the copper market, as far as I was concerned, this is where you had to be out of the market 5 days ago, roughly. First challenge of the Bollinger Band, not embedded. Got to wait and see what it's going to do. And you're getting a bounce. What is this market? It's still bearish. I expect to see resistance at 346, but I don't teach that traders put on new positions in oversold market. And I define in the course and other things what is an oversold market. This is an oversold market the way that I teach. In the platinum market, what we have is a market that went from basically the lower band and it stretched it out to the upper band, stretched it out a bit, fell back, and it's just back and forth in here, void of a trend. There is no trend that I see in that market. And I have the same problem in the palladium right now, just back and forth between the bands, basically, and just fighting. No follow through, up, down, or sideways. Difficult markets without any question. And then we get to the dollar index. Well, in the dollar index, something interesting happened. If you and I come together here, let's count through yesterday, Tuesday. Were we embedded? Embedded means both numbers are over the 80 level. Yep, there. Yep, there. Not there. So the market needed today to have both numbers over the 80. This is how it finished the day up. Are they both over 80? They are. They're embedded. Tomorrow's the key day. If the market's going to fail, and it will when the market opens immediately because of the range and you closed at basically today's low, you're going to lose that reading. It would have to have a monster day to get it back on a big rally, which means the odds favor that you're probably going to try to fall to wherever the 18-day average is. Now, that 18-day average is going to move up as the market is trading like this. As you can see, today it's 110.40. The day before, 110.22, 109. So it's about 20 points a day. So at a minimum, I'm going to look tomorrow for it to be around 110.60, right in that general zone. And the key will be, is the market going to try to get there, or does it reverse course? Going to be a heck of a day tomorrow because everything's going to fight for direction. So if you're with me in my morning subscriber video, I'll be reviewing all this at 5:30 in the morning and throwing out signals if I see any there to do on the different trades, but expect the market will lose that reading right off the bat and could lose it by a lot. It depends how the market wants to open tonight and what it wants to do, but I expect it to be lost. I'm Ira Epstein. I will see you all tomorrow. Hopefully you join me in my morning subscriber video, and I'll catch you there.